So, right now in the world of luxury goods, something really weird is happening. The diamond market, it's like it has a split personality. It's telling two totally different stories at the exact same time. Let's dig into what's going on.
I mean, how can it be? How is it possible that the price of a smaller diamond is just plummeting while a big, beautiful statement diamond is holding steady or maybe even getting a little more expensive? That's the big question, and that's exactly what we're going to decode today. Okay, so here's our game plan. First, we'll get into this tale of two diamonds. Then, we'll decode the diamond index to see what the hard data says. After that, we're going to look at what's happening with global demand and the supply chain. And finally, we'll try to figure out what's next for all that sparkle.
All right, let's jump right into the heart of it. You have to understand, the diamond industry, it's just not one single market anymore. It's completely fractured.
So, check this out. As of November 2025, this massive divide has just opened up. On one side, you've got your smaller diamonds, the ones under a carat. Their prices, they're falling and fast. But then, on the complete other side of the spectrum, you have the big guys, 3 carats and up. They're basically weathering the storm, no problem. Prices are stable, sometimes even inching up a tiny bit. It's wild.
And hey, don't just take my word for it. The numbers, well, they tell the exact same story. Let's follow the data and see for ourselves.
So, to really get what's going on, we have to look at the industry's benchmark. It's called the RapNet Diamond Index, or RAPI for short. Think of it as the gold standard for tracking diamond prices. It's the most reliable source we've got to see these trends play out in real time.
And wow, this table just perfectly illustrates that divide we're talking about. Just look at the November numbers here. See that line for the 0.30 carat diamonds? It's down a whopping 6%. Now scan down to the bottom. For the 3 carat stones, it actually edged up 0.1%. I mean, the data just couldn't be any clearer.
This chart is fantastic because you can literally see the story unfold over the month. Look at those lines for the smaller stones, they're just taking a nosedive. But then you see that yellow line way up at the top? That's your 3 carat diamond. It's just cruising along, totally unfazed, completely detached from all the chaos happening below it.
Okay, so we've seen what's happening, but the big question is why? To answer that, we've got to look at who's buying what and where they're buying it. Because really, global demand is the engine driving this whole thing.
Let's start in the US. Over here, holiday shoppers, they're looking for those big, impressive, investment-worthy diamonds. But at the exact same time, you've got major jewelers pushing lab-grown or synthetic diamonds for more casual, fashion-forward pieces. So what you get are these two totally separate lanes in the market. One for big, natural stones, and a whole other one for the synthetics.
Now, if we hop over to China, the market there has been pretty sluggish, but there are some glimmers of hope. Jewelers on the ground are starting to say that the worst might be over, which hints that things could be slowly but surely stabilizing.
And then there's India, which has its own unique story. See, demand inside the country is actually pretty strong. The problem is, the whole industry is getting hammered by U.S. import tariffs, and that's forcing prices down. It's a textbook case of global politics messing with local markets.
Okay, so that's the demand side. Now let's flip the coin and look at supply. Because this isn't just about who's buying, it's about what's even out there to be bought, from the moment it comes out of the ground to when it hits the manufacturer's table.
And this number is just staggering. A 45% plunge in rough diamond imports into India. And remember, India is the world's manufacturing hub. Now, this isn't some accident. It's a very deliberate move. The manufacturers are slamming on the brakes, hard. They're desperate to get rid of their overflowing inventory and hopefully, just hopefully, stop the bleeding on those prices for smaller stones.
Which leads us to this really interesting showdown. You've got De Beers, right, the biggest name in the game. They're trying to keep their official prices for rough diamonds stable. But here's the kicker. Buyers can just go out on the open market and find the very same rough stones for a lot cheaper. And that, as you can imagine, puts a ton of pressure on that whole official pricing system.
So you've got this split in demand, you've got this major squeeze on the supply chain. What in the world does this all mean for the near future? Let's try to put all the pieces together and see what's on the horizon.
Well, the holiday season outlook is, you guessed it, pretty mixed. But that key trend we've been talking about, it's holding strong. Independent jewelers are really counting on solid demand for those large, high-value diamonds. And there's a cool little twist happening too. We're seeing unique shapes, like marquise cuts and those beautiful old mine cuts, getting super popular with buyers who know what they're looking for.
And all of this brings us to the biggest question of all. With lab-grown diamonds really taking over the fashion jewelry space, and all this pressure on the natural diamond supply chain, is this split the new normal? This idea of two completely separate markets, one for everyday sparkle and another for timeless investment. Could this be where the industry is heading for good? Definitely something to think about.